Hey miners, welcome back to the channel McNallie Money, the official home of power mining analysis. Huge interview for you today. We've got Jason Les, the CEO of Riot Platforms, joining Anthony Power and I to talk about Riot's strategy entering 2025, their recent convertible note and Bitcoin purchase, and of course their Corsicana construction update and potential outlook into the HPC AI sector. We've got so much to talk about. Before we get into it, take a second, smash the like button, you guys. If you're not already subscribed to the channel, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Riot, how you're feeling about this company heading into next year, and your price target on Bitcoin in the final 2 weeks of 2024. Now, with that being said, let's get into today's interview. Okay, guys, so that's right. Back once again on the podcast, we've got Jason Les, CEO of Riot Platforms. Jason, we had you on not too long ago, but there's been so many developments at a macro level, at a company level. We're now rounding out the end of 2024, so thank you for coming on here. Looking forward to getting an update.
Yeah, thank you for having me, guys. Obviously, an incredibly exciting time in the industry. Bitcoin has gone up so much over the past 6 weeks. We crossed the 100K, big milestone. Lots of activity in the market around that. So glad we could hop on and catch up.
Most definitely. Now, first question, as we're getting close to the end of the calendar year, looking back at 2024, there's been so many memorable experiences, specifically with Riot. Specifically, our Corsicana tour was a highlight of the year for me. Looking back, Jason, what would you describe 2024 as for Riot?
I think it was a very transformational year for Riot, and that Corsicana facility is a big part of the reason why. That's the result of so much work that we have done over the past couple of years. That has been our primary growth pipeline. And to finally get that online and rapidly scale that up and be increasing our hash rate so substantially over 2024, that's really big for us. So I would say it was a very transformational year because of what we've been able to accomplish, getting new hash rate online, building new capacity, increasing the amount of Bitcoin that we have on our balance sheet, I think at a very opportune time. What we've been able to show for our power strategy and continued low cost of a mine, and what Riot has been able to accomplish in the M&A landscape. We're very proud to have acquired block mining this year and diversified Riot, historically only focused in Texas, now with an amazing team out in Kentucky building and growing hash rate there as well. We're working on a ton of things all the time, and it always means a lot to us, and we're happy when we get to the point where we can share publicly, the different milestones we've reached and the different things we're working on. And as transformational as 2024 was, I think we're even more excited about 2025.
Awesome. I mean, we'll talk about one of the latest developments. And in recent weeks, you announced the convertible note using the same strategy as a number of your peer miners. Now, bear in mind, Riot Platforms, generally produces one of the cheapest Bitcoin, and you've decided to use some of that convertible note to go and purchase more Bitcoin. Can you just talk us through when you started formulating that idea for that strategy and then to purchase Bitcoin with the proceeds?
Well, I think the building blocks of the strategy go back to Riot's inception. Since 2017, Riot has been mining Bitcoin, adding Bitcoin to our balance sheet. So that has been part of our strategy from the beginning. That strategy evolved further at the start of this year when we started holding 100% of the Bitcoin that we mined each month. I'm sure you noticed that, through different parts of 2022 and 2023, we were selling various percentages of our monthly production. And then after a few weeks into 2024, we started holding 100% of our production. And that was the beginning of us thinking about this Bitcoin treasury strategy at a new scale and thinking about how we can optimize for Bitcoin per share. It wasn't a metric that we talked about, Bitcoin yield. It wasn't something that we were talking about, although you would look back in some of our decks, we started to highlight that metric, but just giving it for information's sake, really. But we were thinking about it behind the scenes, and because Riot is a low-cost producer, because we're able to achieve such a low direct cost per Bitcoin, particularly on an energy basis, we saw an opportunity to essentially fund growth and fund operating expenses through issuing equity with our ATM program. And we believed over time that would increase Bitcoin per share itself. It takes time to accomplish that, of course, because there's these big upfront capex payments. Particularly, we're building something like Corsicana. We're building at a facility that will last many generations of miners to come, and there's a big upfront cost to doing that. But when we look at it, we believed, okay, we build this foundation now where we put in new generation miners, and hopefully many years in the future, it'll be when we have to upgrade miners, so get a long useful life out of what we have today. And then over time, we'll be increasing the amount of Bitcoin that we have. And because of our low cost production, that would result in a positive Bitcoin per share. So that's something that we had already been thinking about. As the convertible bond market opened up in the fourth quarter here in 2024, we saw an opportunity to get very attractively priced capital to accelerate the strategy. So that's how I described what we did with the convertible bond issuance. We've had the same Bitcoin treasury strategy for a while, and we've been thinking about this metric behind the scenes. This convertible bond issuance and using the proceeds to buy Bitcoin has enabled us to accelerate the amount of Bitcoin per share that we are achieving in a time period that we think is very exciting for Bitcoin. The change in the political landscape, alongside the same year, we're introducing Bitcoin ETFs, and then now we're seeing more and more blue chip companies and significant names getting behind Bitcoin. Bitcoin is always on the verge of something huge, and I think the platform for increased adoption and use of Bitcoin as a store of value or as a medium of exchange is getting better and better. So with this opportunity in the convertible bond market, we had the opportunity here to get debt at very attractive terms. We've used those proceeds to acquire Bitcoin. So we went from 11,425 Bitcoin at the start of this month to now having 17,429. The result of that is a little over 36% Bitcoin yield, an increase of Bitcoin per share. That was for the quarter, and then for the full year, we're at 37%. So because that full year number is higher, you can see we're already achieving a small yield just from our mining business, and getting so much here in the fourth quarter, like I said, accelerates that strategy and increases our exposure to Bitcoin. And we think it's always an opportune time to be increasing exposure to Bitcoin.
Couple of quick follow-up questions on that. One is, would you consider using the same strategy? We've seen Marathon literally do two $1 billion convertibles in the last month. You've just done the first one there, and proceeds just under 600 million. Would you consider doing one in the future?
So, I mean, we're looking at the market and all the different options all the time. I'll tell you one thing. About Riot, I've talked about for some time. Something we've always hammered home is balance sheet strength and being conservative on leverage. This is the first time Riot has taken on a meaningful amount of debt, and we're very cautious not to get over leveraged. So something that we look at is, how much Bitcoin value do we have? So just looking at the company from just a Bitcoin value basis, not even looking at cash or other assets, but what is the value of our debt relative to the value of our Bitcoin? That is something that we're focused on. And we don't want to get too over leveraged from that perspective. So if we were to issue another convert today and buy Bitcoin, we would, I think, be over leveraged. So we're kind of right around the limit of what we feel comfortable with. What's great about Riot, though, is because we have this mining business and operations have been ramping up in the fourth quarter here especially, and we're mining more Bitcoin every day now, that we are essentially naturally deleveraging over time just by taking monthly production and holding it on the balance sheet, because that's increasing the amount of Bitcoin we have without taking on any debt. We're open to doing another convertible bond issue in the future. The market doesn't always love it when you do one so closely after the other. So I wouldn't expect to see Riot do one in the immediate term. I don't think anyone's going to do any more converts. Probably for 2024, it's possible, but we're so far at the end of the year, approaching the holidays, that the market has probably slowed down a little bit. The other thing we're mindful of that I wanted to touch on is the maturity date that we take on with these bonds. So we chose a little over about a 5-year maturity date because Bitcoin's volatile, but over the long term, it's always shown significant price appreciation. And something we're mindful of is the convertible bond investors that bought in this issuance, that they wouldn't want to see us come back necessarily immediately, and then put in a new bond that's, right in front of them. So I think it makes sense to have a little time between us. That's how we're approaching it. I don't think there's a right or wrong way. Everyone has their own flavor to how they tackle this.
With the convertible note out there, and obviously there's the pricing involved. Is there any restrictions on you actually continuing to use an ATM going forward? Do you have to get any permissions from the note holders to do that, or is that an irrelevance?
Everyone's agreement can be a little bit different in these. There's two things to point out, actually connecting to your previous question. There's some lockup period where you agree not to do a convertible issuance for a little period of time. And there is some lockup period for the ATM as well, although that is more limited.
Makes sense. Good question, Anthony. That was going to be one of mine as well. The other one here, Jason, we've seen some of your peers do a capped call structure with these convertible notes to limit potential dilution. So this strategy, along with what we've talked about with MicroStrategy, it works great when Bitcoin's going up, but at some point, you're going to have these people either convert into shares or you'll have to pay back the debt. Can you talk to us just quickly about the thought process, the capped call transaction versus the style you guys went for?
So some issuers of convertible bonds use a capped call where they effectively are using proceeds to institute this capped call, and it effectively increases their conversion price. So that reduces the dilution over the long term. There's pros and cons to that. Obviously, the pro is, like I mentioned, you reduce the amount of dilution, at that conversion price. That conversion premium becomes higher. The con is that it becomes more difficult to convert. You have to achieve 100%, in some cases, increase in the stock price. And if you don't take that, then you have to repay the bond in cash at the maturity date. And a number of issuers lately have introduced the put rights in their convertible bond issue as well, and that gives the investors the right to call their bonds in cash in whatever that put right period is, 2.5, 3 years, something like that. So while that can result in a lower coupon, often we didn't want to take that risk. We chose a more conservative route. Additionally, these capped calls are expensive. It takes a significant amount of your net proceeds to do that. We wanted to put all the net proceeds, everything that we could, into buying Bitcoin. And I think you see from our updates, net of fees, substantially everything has been deployed into buying Bitcoin. So, once again, there's, I think, different flavors and approaches of how you want to accomplish these, whether you're leaning towards maximizing the amount of proceeds that you get and limiting your risk as much as possible. And then there's another view where you're minimizing dilution and giving up proceeds and taking on some additional risk to accomplish that. I think we chose the more conservative route, and we chose the route that would get us the most amount of Bitcoin per share.
Awesome.
Yeah, appreciate the color on that one.
In terms of, let's move on to sort of one of the topics that most retail investors are keen to see is in terms of hash rate. Now, in your last update, again, you showed increases in operational hash rate and energized hash rate. You've got a target, I believe, of 34.9. Correct me if I'm wrong on that. For the end of the year, and that's fast approaching now. Literally 2 weeks away from the end of the year. So, first things first, are we still on track for that target? And secondly, we have seen in the last 4 or 5 months the operational hash rate start to improve. When can we sort of start seeing that more in line with energized hash rate from your expectation of what you can see now in regards to things happening at Rockdale and obviously the installation and energization of the last building in this first phase at the Corsicana facility?
So we remain charging towards 34.9 exahash. That's our 2024 year-end goal. We are accomplishing that at all 3 of our sites. So we have our Rockdale site. We're doing a minor refresh in some of our buildings that would get increased hash rate capacity there when fully complete. You mentioned Corsicana. We have the final building of miners that would be coming online. That would increase our hash rate there. And then we have growth going on in Kentucky. So 3 separate Kentucky is multiple sites, but let's just say 3 separate sites where we're moving forward on this growth. And the other key part here that you touched on is it's not just about getting a higher deployed hash rate figure, hash rate capacity figure. We are very focused on narrowing that gap between operational and deployed hash rate. That has been, I would say, the biggest focus at Riot internally over the course of 2024. We've talked about the internal mission that we have of operational excellence, and that comes in a variety of different shades. It's about achieving the best uptime. It's about achieving that uptime at an efficient cost and in a very safe manner, considering the size and scale of of our operations, the amount of work and people that go into it. So, operational excellence is our, I would say, North Star goal here in 2024. And I'm very proud of the significant increases that we've seen. I think you've seen every month now, or in the recent months, you've seen that operational hash rate getting closer and closer to that deployed hash rate. Now, I know I mentioned this before, but it's something I always like to touch on when we talk about these figures. Our deployed hash rate figure is at a point in time at the end of the month. Our average operating figure is what was the average hash rate over that entire month. So if we don't deploy miners to the very extreme example, last day of the month, then we'll get no benefit on the average operating hash rate side, but the deployed hash rate would increase. We don't game these numbers. We're just trying to lay it out how it is. And,
No,
and I think
absolutely, Jason. No,
in our
yes.
monthly updates, we'll always focus to draw attention to that because I want people to understand and see the progress that we're making, and not people think that we're going in reverse if we get a bunch of hash rate on towards the end of the month. And everyone's working very hard towards that. So narrowing in a little bit on the operational hash rate, Anthony, your question about getting that closer to deployed hash rate. There's two main ways that we're accomplishing that. The first is simply growth. We are growing in a more operationally productive, efficient way. Corsicana is running very well. The new immersion design, you guys saw it. The building designs, the new type of miners that we're using, that facility is running well. So by that hash rate being a bigger makeup of our overall hash rate, we're getting more efficient. We're narrowing that operational to deployed gap. Very similar to Kentucky. They're growing out there, and we're deploying those microBT air-cooled miners out there, and that's running very well. That is a similar lesson that what's going on over at Rockdale. We're making fleet refreshments. We're making some changes there. We've learned a lot over this year after we deployed our first 100% microBT M60 series miner building, and we're building upon those lessons in other buildings. So every month we've made progress, and we're continuing to make progress. I think going into 2025, you'll see that we're going to be on a much stronger foot. And I don't have an exact date or number that I can tell you. But you look at the operational updates, you see the momentum is there. Month after month, that operational hash rate has been increasing faster than deployed hash rate, and that's reflective of us getting better at operating hash rate.
Yeah, it has been getting the increase in the operational hash rate percentage-wise has been greater than the actual increase in deployed hash rate, which is good to see. So we still saw there was still a sort of a gap there, and I understand, and I do give, when people didn't used to put in the operational hash rate, if there was a big moving hash rate during the month, I tried to average it for the month. I will never give a company an expectation of saying we've just installed 3 exahash, so it was all done at the start of the month. As a sort of a guide, I would have said that would have been half that amount. So you would installed it every day, and you've got a linear growth plan. But we did see over 30, I think it was 30.8 exahash of deployed hash rate at the end of November. Now, obviously, taking account of there may be some curtailment. I don't know how much curtailment operates in sort of these cooler months now in December. The eagle-eyed retail investors out there will be certainly expecting your operational hash rate to be a lot closer to 30.8 going into the end of December. I think that's probably where we want to see the gap close up. So if you're highlighting your new deployed hash rate, the following month should be the start point from where that deployed hash rate is. Then you should be deploying all that hash rate as energized hash rate. But if there's any curtailment required, because you're on market rates, and if the rate spikes, you'll switch off. Does that have a major impact during these cooler months?
It does not have a major impact, and as you noted, the 4CP is June through September.
Yeah.
So there is some of that. There's not a lot. There's once again, there's two ways that we're improving our operational hash rate, though. It's when new hash rate is deployed, and then when we're fixing the hash rate or improving hash rate that's already been deployed. So that's why it's the numbers don't always work exactly 1-to-1, as you noted. 30.8, that still includes hash rate that we're optimizing in there. We didn't take our hash rate capacity down. We have just been, working on those miners to improve their operating hash rate wherever they deploy, particularly at Rockdale. Rockdale is the facility where we are making these improvements because the new deployments are happening in Corsicana, Kentucky, or elsewhere. So I think you will continue to see very strong progress. And going into 2025, you're going to see those numbers get closer and closer together. I think you also touched on, Anthony, not everyone provides this level of transparency and this level of metrics. If we wanted to be to just if our goal was to look as efficient as possible, we wouldn't disclose a deployed hash rate figure. We would only disclose what our average operating hash rate was. That would make us there'd be no denominator to judge us against effectively. So we just like to put the numbers out there. We think we should be held accountable to that. That level of accountability makes us better, and that ultimately helps us get to our goal of operational excellence.
I'd like to concur. The level of transparency and the actual updates that Riot do, and there's a number of other miners that do as well. I mean,
we're not the only ones.
It does start to get to the stage where it's a bit like War and Peace when you read through. You need to spend quite a lot of time going through these updates because there's so much information out there, and retail investors have been so fortunate to have this amount of information from public companies on a monthly basis. This is unheard of probably in any other industry. And bear in mind, Jason, when we first started using Riot and some of the older peer miners, it was literally 3 or 4 lines. How much you mined, there was a hodl, you sold some, and maybe you'd bought a couple of machines, and it was in 2 or 3 sentences. Now you're having to scroll down the page to find out all the information there. And there's even more information that comes up on social media. As soon as you do something else, it's constantly out there. So you kindly provide even the power costs. You provide your efficiency for the mining machine. So
after your request, now we threw that in there. That was a new one for last month.
So now we can physically calculate.
We include this level of detail, down to Rockdale. That's where the improvement in operating hash rate really needs to happen. And I think if you look at Rockdale specifically, year over year over the past few months, that has been improving dramatically. And it's not an overnight thing. It's not like these miners are offline and someone just needs to remember to flip the switch. It is a continued project that we've had here, and we're making big progress month over month. And that's going to continue, and then we're going to be at a good point humming along here.
Yeah, no, thanks for that. Thanks for that transparency, Jason. Really useful.
Hey, Jason. So on the theme of Corsicana, we wanted to get a bit of an outline in terms of your 2025 construction or roadmap there, potential HPC applications, if any. And on the theme of holding yourself to higher targets, you said in one of our last podcasts, this nugget in there about the 4CP transmission kickbacks that you'll now be eligible for at Corsicana. So I wanted to remind viewers of that because I think that's a great example of holding yourself to a higher standard this year. If you can kind of work that into the Corsicana construction update.
Yeah, well, let me just start backwards talking about the 4CP. So for everyone's review of how this program works, if you curtail your load in the peak periods of each of the 4 summer months, then for that load, you will save on transmission costs in the following year. Because Corsicana was newly online and ramped up in 2024, we're paying 100% transmission costs. At Rockdale, we've operated a number of years. We are getting the benefit now. Since we're brand new at Corsicana, we don't get that benefit yet. So for the load that was able to participate in 4CP over the summer months, we will save on those transmission costs in the future. And the transmission costs, they can vary, but they can be pretty meaningful. 0.8 of a cent or so. Let's just talk about it in megawatt hours instead, so it's a little bit easier. But $8 to $10 a megawatt hour. You're talking about potential savings for your full load. Now we've had load coming online after the 4CP, so we would not get the benefit of that, but we should see pretty meaningful savings in transmission costs going into 2025 for the load that was operating at Corsicana. Now, the growth at Corsicana in 2025, the first main thing that has to occur there is expanding that substation. We have a 400 megawatt substation there now, and we are expanding that substation to increase the power capacity. Right now, our plans are to add approximately 2 buildings to Corsicana. It's really towards the end of 2025. However, nothing is set in stone yet. We are still open to maximizing the value of that power, seeing if there's a way to get a potential HPC AI client in there. Our options are open. I'm not saying one way or the other yet. Our growth plans have been towards adding hash rate there, but we're open to ways to monetize that capacity. And the first step to getting that done is getting that substation online.
If you look at what you've done in 2024, you've obviously energized effectively now 400 megawatts. And if there was never any talk about HPC in the conversation, and bear in mind we were there, in Corsicana when your mind and the company's mind wasn't focused on HPC at that particular point in time, would your plan to get more buildings? I mean, you've just built 4 buildings in 2024. Would it not have been seamless to have created, the next 4 buildings in 2025 using the staff that were building the first part of the construction this year?
Well, we can always get, the staff levels, the number of contractors that rises and decreases based on the amount of development going on. But the key part of achieving this growth is that substation. These high voltage transformers, especially 345 kV transformers, can have a 2-year lead time at this point. So that is really the gating item to getting more capacity out there. So we started that expansion process in 2024, and based on the timelines, it's now looking like we'll be able to get that first part of the substation online in 2025, towards the end of 2025. There wouldn't be a way to do it sooner because of staff. It's all about getting those key pieces of electrical equipment delivered and installed in time. If we'd ordered that equipment, years ago, then it would start to become online now. But we took this project in incremental steps. It's kind of the way we've always grown. We've done big growth steps, first at Rockdale and now at Corsicana. We look at how that growth went. We look at what worked and what didn't, and then we use that to inform improvements to design afterwards. So we didn't want to just rush through and try to build 1 gigawatt as quickly as possible, because it would give no time to learn those lessons. You have to be ordering equipment before the first equipment is even online. It takes more time, but I think that more measured approach is more prudent for this type of growth.
Does Corsicana, now that you've sort of changed the sort of like the thought process into maybe considering HPC, does it allow itself to potential HPC being sited at Corsicana? Have you got the necessary fiber? You have got the water there, obviously. We've seen a big swimming pool, and obviously you've got the power coming online, in 2025, 2026. So does it fit all the criteria for a potential, HPC client to come in there and be hosted at that site?
So what's great about the site is its location proximity to a major metropolitan. A lot of the sites people are looking at these days, they are farther away. Corsicana is an hour outside of Dallas, which is of course a major metropolitan. We do have the fiber there, of course. We have that retention pond. However, more water would be needed to facilitate an AI HPC client. Those cooling systems use more water than our immersion cooling systems do. We've actually gotten pretty water efficient with those over time, which is why that retention pond made a lot of sense for us. So that's the type of thing that we're solving for. There are some hurdles like this that we have to overcome to facilitate a large scale client, but we're working to do that, because if there's a good deal where we could increase the value of that capacity and get a great contract in there, we want to do everything we can to make that possible.
And would you say at the moment, in terms of conversations that you're having sort of significantly more conversations around potential HPC than you've had in the past now that you're changing your potential strategy? I mean, Bitcoin prices at the moment 107, 108,000 today. There's got to be a tipping point when Bitcoin actually starts becoming the main conversation again, because HPC is more predictable. Based on a level, and we've seen that through the Core Scientific deal, and we'll probably see that through some of the miners who are about to announce their deals in the sort of like very near future. But with Bitcoin price rallying, I seem to remember Sam said it would have to get to about 130,000 for the conversation to switch away for him from HPC. Well, we're not that far away now. What do you see in your view, over this sort of like next year, as we're in a sort of like starting, it looks like we're in a really, a bull cycle again, like we were 4 years ago. Do you keep your options really open? And have you been having sort of like, potential conversations more often since your thought process changed?
Yeah, we have been in conversations with multiple parties now for a number of months. I can't share any detailed updates about how these conversations are going, but they're very credible counterparties, and that's important to us in doing a potential deal here because you're talking about building capacity in one direction. We can't just turn around. This Bitcoin mining and AI HPC, it's not interchangeable. Some people may have designs where they think they can accomplish that. The way that we've built out Corsicana, at least the way those plans work with immersion, we cannot go back and forth. So if we're going to build capacity towards AI HPC, we want to be very sure that we're going to be getting revenue from that, from a very creditworthy counterparty for some time to come. Now your question about how we think about the economics relative to Bitcoin price, I think there's a bit more nuance there. It's not as simple as which one is higher because of the predictability of that cash flow. It's not subject to the volatility of Bitcoin, although Bitcoin has appreciated over a long time. Mining is competitive as well. You have the network difficulty working against you, and you have the halvings as well. So there's multiple components there. I think that having cash flow from a very respected hyperscale client would be, like I said, predictable, and I think that the market would value that accordingly. So it's not simply, hey, what's going to be better or worse than Bitcoin at this point in time? I think there's a lot more details that you have to look at, and we value that predictability as well. And by the way, I think that type of agreement augments our strategy very well, has the potential to augment our strategy, both the Bitcoin mining strategy, as that would be cash flow coming in that helps cover expenses there, and the Bitcoin treasury strategy as cash flow comes in to either service debt or potentially purchase Bitcoin as well. So all of these things work together, have the potential to work together rather to support this strategy. So I think the theme at Riot is we have an open mind. We're exploring different possibilities. We want to do what we want to take the path that maximizes the value of that capacity.
Thanks, Jason. Now, I wanted to touch on Starboard value. You mentioned HPC. They recently announced or disclosed an investment in Riot. They highlighted HPC opportunity as a potential avenue forward for Riot. So I understand it's sensitive. You're not able to share a lot of information. Is there anything you can comment on that situation right now?
Yeah, so I mean, we wouldn't want to comment. As a matter of policy, we wouldn't want to comment on detailed discussions with any shareholder. We value regular engagement with our shareholders. We want to be able to receive feedback and talk to them, and it wouldn't be right for us to be out there repeating everything they say. But I think from the Wall Street Journal article that came out, you can see their interest in Riot is around our power assets and potentially getting a type of AI HPC deal to maximize the value of those assets. But I think, as we've been talking about on this program, we've talked about podcast, as we've talked about on this podcast, in previous episodes as well, we've been evaluating ways to see if there's a deal that we can go in there. I think what this says is, as the Wall Street Journal article noted, is, they see value in our power assets. And the fact that a large fund like that has taken an interest in Riot and is invested in Riot as a shareholder of Riot, I think that is a major milestone in how this industry has evolved and how Riot has evolved. We're always looking for support. We're actively trying to increase our institutional shareholder base all the time, and I think this is a matter of an investor recognizing the value of our power assets here. So we're working hard to maximize the value of those assets. We've already been talking about AHPC, so I don't think I can add anything more else to there. But it's an exciting time to own power assets.
Hey, I'll throw another difficult one in at you while we're going here. We just saw in your Bitfarms dealings that you've had to actually disclose the percentage of the company that you own. So my understanding with the Starboard value is they would actually have to disclose as they hit milestones as well, 5%, 10%, 20%. Is that correct, Jason?
The SEC requirements are an investor disclose a position over once it gets over 5%. So Riot started disclosing its investment in Bitfarms once we crossed the 5%. And then there's Canadian rules. There's kind of another wrinkle to that there. There's Canadian rules at 10%, where there's some additional changes as well. And so, yeah, if you own more than 5% of a public company, it has to be disclosed in a timely manner.
Those Canadians. And on the topic of Bitfarms, again, a sensitive subject, but one that we've received a lot of questions from the subscribers about. Anything you can share in terms of details on your thinking, strategy, outlook with Bitfarms' position?
Yeah, so Riot remains a significant shareholder in Bitfarms. We entered that settlement agreement in September. They recently made some changes to the board. They completed their special meeting. They added a new director that board independently picked, and they're moving along their strategy. I would say we have a collaborative relationship with them, just like any other shareholder. We're following them closely. We meet with the management team and talk about what's going on, and get their updates, especially around earnings that are released. So we're moving along there, and nothing else concrete to update right now. We have our position. We're following what they do closely.
Just like any large, investor in the company would receive, basically, effectively, wouldn't it? That type of information.
Yeah,
and that's good. That's good. That's good to hear. In terms of, we spoke about growth, and we spoke about the fact, obviously, you've got the 600 megawatts still to fill at Corsicana, but that doesn't get you too close to your long-term hash rate goal, which I think in your last presentation was about 100 exahash. Let's go all in for 3 digits and get to the 100 before anyone else starts using that growth target. But obviously, you're going to have to find additional sites to get to that target. And we spoke earlier in the year on a podcast, and you were saying at that point in time that Corsicana is a 1 gigawatt, and there are not too many of those sites going to be available in the future. What are you seeing? Bear in mind, some of the other miners have picked up some reasonably big sites, not that sort of level, but 200, 300 megawatt sites have been achieved. What are you sort of like seeing, and are you looking at what's available now in readiness to get to that position where you're going to start having to fill those new sites with miners to achieve your goal?
So our 100 exahash target, that's our longer term goal. We don't have a specific year that we're guiding to when we will achieve that. I think in our deck we laid out that in beyond 2026 we would be able to achieve that. So we're looking at a number of ways to get there, which is really starts with increasing the power capacity. We're looking at organic opportunities. Is there a way for us to increase capacity, build out greenfield sites, or is there M&A opportunities for us to bring in power capacity as well? We're pretty open to a wide variety of ways to accomplish that. It does not need to be 1 gigawatt sites. It doesn't even need to be 300 megawatt sites. We could do even small sites as long as the operational complexity isn't so much. Make sure we can still organize it under our constructs, under the way that we're laid out. We could bring in very small sites as well. So we're open to all sorts of tools. One of the great things that we built here at Riot is this foundation of talent that's able to go out there and find these opportunities and then build them. We have a number of things in the pipeline at any given time that we're always looking at in incredible detail. So Bitcoin mining is a competitive space. Things move fast, opportunities come up. You have to be in a position to act on them timely and be able to thoroughly vet them and move forward. So there's a bunch of different ways that we can get that power capacity, and we're looking at all of them. I think when you look at the amount of incremental capacity that's needed, it's probably going to be a mix of things. It's going to be a mix of greenfield, us acting on new opportunities ourselves, and likely to be a mix of some M&A, finding opportunities where there's additional power capacity that we could bring in and build on top from there. So. It's very exciting. I think it'll be a major milestone for the first miner to get 100 exahash. Although I don't know if anyone remembers the first miner to get to 10 exahash, but 100 is a big number. And of course, we would love for Riot to be the first one to get there.
It certainly is a big number. Hey, we've talked about so much in today's podcast, Jason. Obviously, 2024, as you say, a transformative year for Riot. 2025 shaping up to be just as exciting with Bitcoin smashing through all-time highs and exahash continuing to come online. I wanted to give you the opportunity to close out, and thank you so much for your time today.
Yeah, thank you, Bryce. Hey, what Riot is known for is that low energy costs per Bitcoin. We've been able to achieve that through our power strategy that's been built up over many years. So what we're doing as a company is trying to scale up that efficiency over the widest scale possible. That is the one cost that scales linearly with hash rate growth. The other operating expenses, SG&A expenses, all scale significantly slower in comparison. So we're out there looking to put that efficiency to use, growing at the sites that we have and identifying new opportunities as well. The fact that AI HPC is a big part of the discussion now, and the fact that there's interest in power assets for that is just another avenue that Riot's able to work on to maximize the value of those assets, increase their cash flow, and support the rest of the business. I think we're also very excited about the ramping up of this Bitcoin treasury strategy now, being able to increase Bitcoin per share and generate a positive Bitcoin yield. That's a focus of ours as well. And our mining operations support that. And we're going to continue to evaluate opportunities in the market to do that as well, whether it's potentially future convertible issuances or buying Bitcoin outright. We're taking it conservatively. We're taking it in a managed way, but we're keeping our mind open. And alongside the Bitcoin setup here, I think Riot is incredibly well positioned to benefit from increase in Bitcoin price and increased opportunities around there. So we're very jazzed up here at Riot. I think morale is extremely high, and really excited to see what 2025 has in store.
As are we. Awesome. Exciting times ahead. Guys, hit the like button. Feel free to subscribe. Let us know if you're holding shares of Riot below. We'll see you back here tomorrow.